Hi, and welcome again to another edition of Market Analysis for today, May 1st, 2024. I'm Giovanni Betancourt, analyst, trader, and educator for Vantage Markets, and this is being pre-recorded to the U.S. session. So, demand for artificial intelligence is still strong, but the stock market can no longer rely on the boom to ride to its rescue. Three well-established AI players, Amazon, AMD, and Super Microcomputers, reported earnings late yesterday amid lofty expectations. The results were pretty good, but the initial market reaction was one of disappointment. Only Amazon's shares managed to climb in after hours trading, and not by much despite strong AI demand. The market appeared in the mood to punish missteps and reluctant to reward success, a worrying sign and a symptom of impressive gains already achieved across the tech sector over the past year or so. How often do you see a company report 200% revenue growth yet leave investors downhearted? Well, just take a look at Supermicro. So the stock market may need to battle on without AI acting as a knight in shining armor, shielding it from other concerns. It would be a bad time to lose that protection, particularly amid signs of increasingly stickier inflation and higher for longer interest rates. Hotter than expected employment cost index data yesterday added to those fears, pointing to higher wages in the first quarter and delivering a blow to the Federal Reserve inflation fight on Fed decision day, which is today. The timing of rate cuts in 2024 remains uncertain. The health of U.S. shoppers is also in question. The Consumer Confidence Index fell to its lowest level since 2022 in April, according to data, while Starbucks surprised investors as it said customers slowed their spending in the first quarter. So, with doubts over AI's position as a market catalyst and consumer concerns, stocks are more exposed to the mountain risks. And with that, let's take a look at what we can expect for today's fluctuation. In front of us, we have the NASDAQ in a daily chart, candlestick chart. We did open with a small gap down, and that is looking to be close so far, has been close so far already. So, will we see a recovery of the market today? The gap down implies that downward pressure is being placed on the markets. So companies coming out and reporting will probably help that again, but let's see. Now, we can also just speculate that the continuation of this movement to the downside will continue towards the 17,215 support level. Now, should we come in and recover and just climb back up from yesterday's sell-off, we can speculate to mark the middle of yesterday's range as a possible resistance level initially, and then if we do happen to climb our way to here, what we'll do is sort of a pullback and then rally to the upside towards the 1780, 850. That is the resistance that I have placed. As far as the S&P goes, well, also open with a gap down. It has been closed, so 5,000 does sound much more closer than 5,100. So imply volatility could measure more downward pressure on the index. So we could probably see that happening today. The Dow is actually showing us just that. Also, it also opened with a small gap down. Well, actually, it opened. Let's see. So it opened where it closed. Okay. So basically, we're gonna probably continue to see this move downward on the Dow. 37,500 will be the target. As far as crude oil goes, well, crude oil has fluctuated down towards the 80 marker. It didn't really get to 80. We've seen some sort of a pullback so far back into yesterday's range. It could probably be said, but obviously the dollar index can place pressure on that commodity since Importers will need to obviously buy it in dollars. So if the dollar index continues to move higher, it's going to get quite more difficult and more expensive for them. So we'll continue to see a move to the downwards on crude oil. We obviously going to be seeing some volatility here. I expect for this to see if it does have some sort of a correction or pullback and then just climb back up above $81. So we happen to be in that scenario right now. Let's just see how far of a correction do we get or how much of a pullback do we get. Then we have Nat Gas. Nat Gas has opened with a small gap up. It has been closed. And let's see if we can actually just continue to this rally to the upside. 180 is the target. Gold also seems to be recovering itself from just a sell-off. Let's see if we can actually come back up to 2,300 initially. Silver is more of a shy movement today. Let's see if it does continue to move higher, or will it have that's all the movement it's going to do today, and it'll continue to move down toward the $26 handle. That's where I have my support. Copper looks to be also just fluctuate on the downside, continuing the sell-off. Well, let's see if 4.40 cents will be the place where it finds support. Currencies are looking to stay north of 106 to 140. That's where I have my support. And let's see if we can at least come back to yesterday's high or yesterday's open. The pound also looking to stay within range. Let's see if it can climb back up towards the 125 handle. And that could probably happen if we see that the dollar index continues to depreciate or just happen to do more of a deeper pullback correction towards the 106 levels. But if it does continue to just appreciate itself, continue to appreciate, 106.500 could be that level of resistance initially, and we'll see more of a pressure downwards on commodities and currencies and metals. That's it for me today. Have a great trading day, and I'll see you tomorrow.